Should we buy or sell the Great British Pound versus the US dollar? So first off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So we are 1.6% away from the 52-week low, 17%-ish away from the highs. So here is the chart, weekly data points, and we are definitively very low. We are almost breaking down below these lows we made back here in 2020. So if you look at the most recent price action here this week, the low end of the wick was testing those lows. So yes, there's extreme pessimism when it comes to the British pound. We have seen that there's a new prime minister in Britain now. There's a change of the guard in the royalty as well. So now we have a king instead of a queen. The thing is that this currency has moved in cycles. So it's one of those situations where, yes, the bears are in control, but there have been cycles. It usually doesn't go straight down. When we look here at RSI, we are very low. And MACD also, when the PPOs are at very low levels. While that doesn't mean that we have to go up. It means that from a pure even like mean reversion perspective, one would expect some upside from these levels. Here are the daily data points, and we see something similar as well. We are emerging from a very abnormally low level. MACD is very close to sending a bit of a buy signal. The previous buy signal we got back here on the MACD, it did result in some upside, but basically just a mean reversion rally, got us above the green 50 daily moving average. So nothing like special. It did not stop the downtrend, but it was a rally. That's the thing. The interesting thing about this pair is that, the previous, global currency was, the British pound. Then after World War II, it became the US dollar. So there's a lot of history here with these two currencies. The thing is that if the British pound were to weaken too much against the US dollar, then the US dollar will be viewed as a major, just a liability. Because sort of like an unwritten rule about having, a reserve currency is that while it is expected that the reserve currency is strong, it shouldn't be so strong that it decimates the other currencies. That doesn't work out. So in this case, I write oversold as an entry signal, stop loss, but I only give the bulls a 2 here on the technicals because the bulls just have a lot to prove. We have seen a lot of bullish opportunities not come to fruition. The British pound keeps getting pounded. So yeah, but yeah, I feel a little bit more bullish than bearish. When we look at the seasonality for this pair, it is a bit interesting. Looking at the right here over the last 10 years in red, 7 years in blue, and 5 years in green. Into late September, we usually see some outperformance from the British pound. To the left, over the last 5 years, September is a weak month. We are still in September, but October is one of the strongest months. The last 10 years, from August into December, we usually see strengthening of the British pound. Big picture, the last 20 years. So the current month, it is definitively September. It closes higher 45% of the time, usually a bit of a loss, but only a minus 0.1%. October is the second strongest month, so that's over like the last 20 years. There probably is a reason for that strength. So I give the bulls a 5 here on the seasonality, with the caveat that September itself usually isn't that strong, but the issue is October. It is a strong month for the bulls, hence if you are a bear, and given that we are now at a low level in the British pound, that seasonal strength might make you look for other opportunities, maybe close out some of your gains. and you look elsewhere, there probably are a better place. You don't really want to be a big bear heading into the strongest month. Yeah. Looking at the fundamentals, I do give the British pound a 1 against the US dollar. So a bit of an edge here to the bulls. That is primarily from the perspective of the history here of these two pairs. It covers a long history, a lot of geopolitical events. So even though there are definitively a lot of bearish things happening at the moment that is detrimental to Britain, then again, there's a certain low level where it is so low that it is abnormally low, where you would expect a bit of a mean reversion. And in this case, I think one could make the case that the pound is pounded a bit too hard and is somewhat undervalued versus the US dollar, because it's not like America is some utopia either. There are severe issues in America as well. Here are the correlations, 52% positive long-term with the S&P 500, 53% positive with the United Kingdom stock market ETF, so very similar, minus 28% with the 10-year yield, and minus 26% with the dollar index. You might expect, not the dollar index. So this is natural gas NG, so forget the dollar index, natural gas. Because natural gas is such a huge topic at the moment for very good reasons. But yeah, we only have quote unquote minus 26% here. Looking at the daily data points, 76% positive with the S&P 500, 90% with the United Kingdom stock market ETF. Then minus 84% with the 10-year yield, and minus 74% here with natural gas. So looking short and long term, what happens with the EWU is very likely going to have an effect on the currency. So yeah, here is the chart of the ETF, weekly data points. Yeah, definitively a very erratic chart. We had a bull market that started in 2009, and then it peaked in 2014. So it peaked very, very early. And ever since that time, we have seen lower highs and lower lows. Very much a downtrend. Looking at the daily data points, it's very hard to become bullish about this chart. It's a very clean rounding top pattern, very oppressive rounding top, frankly, because you see that there are new levels that are becoming resistance. So let me just draw that in. This level back here now is a resistance level. So this is just it's not an easy place to be in if you are a bull. It's very hard to look at the chart like this and be like, oh, I'm going to build a big position. Looking at these other indicators, we are emerging, at least on the daily data points here, from a very interesting RSI level that historically, going way back here to mid 2021, you see that buying the low end of RSI usually works out for the bulls. Looking at the previous rallies, they usually push RSI into higher territory, 55-ish, 56, approaching the 60-ish territory. We are currently at 44. So you could make the case here that there might be a bit more left here based on that history. So most of the times one would expect more. Here I am looking at the currency pair against the stock market ETF. So we see that we have this major floor at the moment, going all the way back here to 2007. So most of the time we have seen the currency itself, be higher versus the stock market ETF. Yeah, when we look here at the seasonality, we usually see some weakness here into later October. But from later October, it usually is more beneficial to be in cash, the currency itself. Usually some very sharp move here in November, as you can see. So significant outperformance versus the stock market ETF. I give the bulls a 2 here on relative performance. I do think that there are some interesting moves at the moment. The key entry signal stop loss is that we are oversold. We do have a 2.5 here in favor of the bulls. The seasonality is especially interesting. Then again, it's been very difficult to call any kind of low here for the British pound because it keeps going lower. So we have some time left, so let's just run through different types of currencies and currency-related products. So here is a GLD. This was a reserve currency for a long time, gold that is, the physical stuff. The red 200-week moving average is playing itself out. Some interesting moves here. If we look at the GDX, a strong move here from the GDX. Yeah, getting into the 20 daily moving average, certainly going to be a resistance levels, because you see that the bears, they shorted that moving average profitably before, so definitely the bears are at it again. But then again, this is a low level. It's not like an ideal place to put on a new short position. Here is silver, seeing a bounce from silver as well. Now let's look at the silver miners. Yeah, bounce from a relatively low level. If you look at these other indicators here, RSI and the PPOs, looking at previous, mean reversions to the upside, we usually went a bit higher. So, and you also here got a MACD buy signal. So interesting developments here in silver miners. And then we have Bitcoin, a huge topic. Yeah, so Bitcoin, it's goofing out around, this 200-week moving average in red. Still very much below it. We are seeing a bit of a floor being built, but we aren't seeing that, major gustos from the bulls either. Looking here at the daily data points. Yeah, the green 50 daily moving average, and you also have the blue 100-day moving average. These are very key resistance levels. So how close are we to the blue 100 day? So let's measure a bit. It's yeah, around 2-ish% above us, so it's very close by. You can see that the bears, they just shorted that moving average back here. Very likely going to do it again unless there's a strong move. So if you look here on the 9th of September, this candlestick is a bit big and intimidating. So these are the kind of candlesticks that can trigger a short squeeze, major short squeeze, if we do see another one. So that would be like the move from the bulls that could really be beneficial. Let's look at Ethereum. Yeah, I mean, you do see, let's look at the daily data points. Yeah, so it seems like the weeklies are the name of the game. So this purple 20-week moving average was resistance for quite some time. Now we have 2 weeks of us being above it. Seeing some pullback this week, but nothing really like dramatic, just a little bit. So Ethereum is definitely looking more constructive. Here is Monero against the US dollar, the 20-week moving average here in purple, resistance. Now we do have 2 weeks of us being above it. Looking at the daily data points here, there is definitively constructive actioning here as well. The 200-day moving average in red above us is definitively going to be a resistance level. I mean, we do have a clean history here of lower highs and lower lows, so the bears are definitively in control. But there are also something here that's it's interesting. Here is Cardano, the 200-week moving average, similar to Bitcoin. It's above us. We haven't broken down yet either, so it's a messy situation where we have a ceiling right above us, we have a floor below us. So the ideal entry here is definitely to get in near the floor. Now we do have this purple 20-week moving average that is a clear resistance level. The bulls definitively need to break out above it, because if you get new resistance levels, then that can embolden the bears, because now the bears are putting on shorts at the 200-week. If the bears now start to put on big shorts at the 20-week moving average, that could ultimately lead to a breakdown below horizontal support. On the daily data points, So the blue 100-day moving average, it is an important moving average. You see here that there is some interaction here between price and that moving average, but not like a lot, but enough for it to matter. And in this case, we have tested it and are rallying from it. So I said this is definitively interesting price action. So yeah, we have looked at various types of money now. There are interesting opportunities out there, but we also have a situation where there is noise as well, and the noisy markets, they can be frustrating.